While examining recent declines from 52-week highs, I noticed that Tesla was among the companies that did not reach their peak in 2019 or 2020. Rather, their peaks were reached in 2020 and 2021. At the bottom of this forming channel, they are currently in an uptrend, though they are still a long way from those highs. I believe the conditions are ideal for Tesla to rise if growth stocks, which can rise in response to rising interest rates, can succeed today. We must go on. For Tesla, things have been entirely different since the company's July 19 results release. The EV company's shares were down 21% as of August 16. The company's shares have been declining since the company's mid-July second quarter earnings, and this month they have lost 15%. Even though Tesla's second quarter revenue increased 47% year over year and vehicle deliveries increased 83%, investors might not be pleased. We certainly think that this is a huge growth, albeit perhaps not everyone does. We'll examine Tesla's current situation and its stock in today's video, talking about what bulls and bears are currently believing. In an attempt to snap a 6-day losing trend, Tesla shares increased by about 7% today. This is in line with some encouraging predictions made by Baird analyst Ben Kallo for Tesla's second half of the year, which include the introduction of the Cybertruck, sustained growth in the energy sector, and entry into new markets. The share price today has undoubtedly benefited from these changes. Let's look at some graphing and the Wi-Fi interactive. This heat map of the current industry demonstrates that, while some EVs, like Volkswagen, are not doing well, overall EV sales are strong. With the exception of Toyota and the Chinese automakers, most of these brands have had difficulty in the past month. But if we concentrate on Tesla, we observe that its stock has dropped from its peak. During my Megacap study, I found that Tesla did not rank first in 2020 or even last year, in contrast to certain other firms. By 2020 and 2021, they had hit those peak values. They are currently in an uptrend and near the bottom border of a forming channel, even if they are still below those highs. Tesla would rise in an ideal world if growth stocks could thrive in the current context of rising interest rates. Very few investors consider Tesla shares over the long run. In the last few months, the corporation has made a number of announcements, but not everyone finds them compelling. The news that Tesla will soon release less expensive versions of its more expensive S and X models exacerbates the situation. Shorter range variants of these vehicles are now available to customers for $10,000 less than the more costly models. In addition, the company is engaged in a fierce price war in China. Welcome back to Tesla Hype, everyone. Long-term supporters of Tesla stock are more interested in the company's ability to produce large profits and cash flow in the future than they are in the short-term trends and margins. Consider this. One company is developing artificial intelligence, AI, and Dojo, a supercomputer that could enable FSD vehicles by enhancing neural net training and supporting software decision-making in a variety of driving scenarios. Many people are unaware that this might drastically alter Tesla's financial situation. Before we continue, please click the like button, subscribe, and enable post alerts if you enjoy this kind of content so you can be informed about all things Tesla. In a recent essay, the author outlined 5 reasons why they believe Tesla would never turn a profit. According to the story, Tesla has only sold 1,063 of its sporty $100,000 electric cars, and the much-anticipated family-friendly sedan variant won't go into production for some time. The car can reach 60 miles per hour in 3.9 seconds. There are other ramifications to this. The report also mentioned Tesla's heavy reliance on government funding and the fact that the company has experienced net losses each quarter since releasing its first electric vehicle on the market in 2008. Although these are the opinions of several analysts regarding Tesla, we will not accept them as gospel for the following reasons. After Ben Kallo, an analyst at Baird, noted that the EV manufacturer would see favorable developments in the second half of the year, including the introduction of the Cybertruck, Tesla's shares increased by more than 5%. According to Kallo, the story of Tesla in the second half will be shaped by price reductions and how they affect profits. He mentioned a number of prospective future catalysts for the stock, including the introduction of the Cybertruck, the broader use of FSD, the energy industry's continuous growth, the opening up of new markets, and a possible AI day. Tesla is operating in a unique way. Although consumers have more options, Chinese and Tesla automakers are nonetheless successful in the electric vehicle market. Old guard automakers from Detroit and Germany, for example, have always taken great satisfaction in providing a wide range of alternatives when it comes to car type, trim, color, and equipment. Tesla, on the other hand, offers fewer configurations. The available choices are restricted to standard equipment, trim levels, colors, and interior options. Even the newly successful Chinese EV manufacturers operate in a similar manner. More options from an automaker translate into more difficult and time-consuming assembly procedures. Tesla and its Chinese rivals have benefited from the simplicity of its construction. Tesla has been leading the EV market for a while, reaching monthly production and delivery objectives that are all-time highs. Due to growing competition, Tesla may be losing market share and profitability, but it still has the advantage. Over the past year, Chinese businesses have surpassed non-Chinese automakers, indicating significant growth. The rise of EVs has been attributed by analysts to international rules on mileage and emissions. Despite growing competition, Tesla is anticipated to maintain a major market share in international markets. Rapid investments in EVs have been sparked by the IRA's passage in August 2022. Manufacturers have invested over $92.4 billion in EV and EV battery plants in the U.S. since the U.S. government signed the IRA into law. According to recent market research, U.S. EV manufacturing facilities will be able to generate over 4.7 million new passenger EVs yearly by 2026, accounting for 36% of all new vehicles sold in the previous year. This surge in production capacity has been observed during the last 6 months. 95% of new cars sold last year will be powered by batteries produced in U.S. facilities by 2027, which will be sufficient to power 12.2 million new EVs yearly. Although the bears enjoy equating Tesla with other automakers, we believe this to be completely false. Recently, Tesla increased the number of nations in which its V4 supercharging dispensers are installed to at least 2, Norway and the United Kingdom. Europe has already seen the construction of several V4 stations, but this is only the start. At the Tottenham Service Centre in the UK, V4 charging dispensers were placed. Pictures of the dispensers show how well they make use of the available space inside their boxy design. How do you feel? Please share your thoughts with us in the space provided, and don't forget to value Tesla. Click on the next video that appears on your screen to find out more about Tesla's recent activities. I'll see you over there.